you will know that what exactly the real financial market looks like. Next is the financial market helps to link the saviors and the investors. Now, if they will not get return on investment, no issues, they get something called profit. Functions of financial market. What are the functions of financial market? It's not just giving the money which you have saved. You are supposed to properly channelize it. Hello everybody, a warm welcome to one and all. I'm Abhilash Chandra from the Department of Business Studies in Vidhyaashram PU College, the Temple of Excellence. Welcome to the new chapter, and the new chapter is all about financial markets. A new topic for you. You will know that what exactly the real financial market looks like. How are we gonna deal with this financial market? What is money market, capital market, stock exchange, stock broker, stock exchange and its regulations? All those things you will learn only in this chapter called financial markets. Gone are those days where market was just a place of buying and selling of goods and services. Now here in this market you will know how to make money, and that too if you are not a person of a business class, no issues. You can actually come here, earn money, but I'll tell you what it is. More than earning, there are people who have lost money in financial market. So if you know how to go with this financial market, you need to watch the sessions of financial market from the first session to the last. Here, let's go for our introduction. The introduction should always be like this. The financial market, if I go with it, that is called FM. I'll just denote as financial market. What really happens is there are two main sectors. One is the household. The household. We call that as household savings, right? And one more is the business firm. That is, they invest in their funds. So there are two things. One is the household and another is the business firm. So when I say financial market, I'll just tell you here what it is. It's all about the economic system. It is all about the economic system. And that will lead to the financial market. So there are two things. One is the household and another is the business firm. Now, business is a part of an economic system that consists of two main sectors. One is the household, which save money or save fund, and business firm, which invest these funds. So there are two kind of things where you will actually go for it. Next is the financial market helps to link the saviors and the investors. So who is that savior? The households are the saviors and the business firm is the investors, right? And that is what the financial market does. Now market, you are supposed to know, it's all about the funding. The money is involved. That is why it is called as financial market. I'll just repeat. There are these business terms which you are supposed to know. One is the economic system. When I say economic system, you need to understand there are two. One is savior, another is investor. When I say savior, it is the household saving. What your parents usually do, household savings. One more is investment. Whatever you have saved, you are going for the investment. That is called the investment. That is a business firm. So let's go with the next one. That is the financial system you have. Now, financial system is broadly classified, but I have given you in a small nutshell. That is how the financial system all starts. Now, let's imagine that you are the person who has saved money. That is your household saviors. You people are, you have saved money. So what is that you people do is you usually go to the bank, right? You go to the bank. The reason is what? Security. So the first reason is what? You will actually go to the bank because of security. Done. right? Secondly, what does that bank does? Because when you go and deposit your money, the bank need to give you something, right? The bank need to give you something called interest. Now the question is, how will the bank give interest? Because the bank will give interest, the reason is they will give more loan to business firm. So in return, the people will actually give them interest. So when they give interest, say it is, again I'll give you a random figures where the business firm is giving it for 8%. Your bank will give you the interest 4%. Still, because of the exchange of money, what is it? The 4% is what the bank is earning from it, right? Now that is done. Third one, so you got to know about the interest. How will the business give 8% loan to the bank? The money they have taken, now what will happen is they will actually invest in the financial market, that is the stock exchange. When they go for it, the stock exchange or money market, all those kind of a thing. Now what happens is they get a return on investment. We call that as ROI, return on investment. Now if they will not get return on investment, no issues, they get something called profit. They start making profit. That is how they are actually doing it. Now what has happened? Whose money it is? It has been rotated. That is why we call it as financial system. How a financial system runs? You are supposed to have money. How will you have money? You need to save money. The saved money you are supposed to invest. When you start mobilizing money, that's why the feature of banking is what? Mobilizing the money. Next is the business firm will take more money from the bank and they give more interest to the bank. But what in return? They start earning more from the financial market. That is the logic here. So everybody are getting benefited. This is what the financial system is. Next, we need to know about functions of financial market. What are the functions of financial market? Now I've given you the types of financial market. You have derivative market, bond market, money market, stock market. Now stock market probably is the only thing which you people know right now, but I'll tell you more about money market, derivative market, bond market. You don't need to worry more about it. So here the functions are, one is mobilization. As I told you, financial system, how it works. Mobilizing the money, mobilization of savings and channelizing them. It's not just giving the money which you have saved. You are supposed to properly channelize them into the most productive use. The minute you have something called the savings, when you try to invest, you need to invest in a proper channel. You need to invest in a proper channel. Next is facilitate price discovery. You should actually check what is that you're gonna get. Price discovery. Provide liquidity to financial assets. Always you should maintain liquidity and you are supposed to go with your financial asset very carefully, because money saved is money earned, but the opposite to is money spent. When you are spending money, you should always think about how to make money as well. Next is reduce the cost of transaction. You are supposed to reduce the cost of transaction. Only when you reduce the cost of transactions, things will be proper. You need to go with these functions. One is the financial market. The functions are, you need to mobilize your savings, and what is that they will do is they will channelize for the most used channel and they will actually give you more return. That is what the financial market will always look into. That to productive use. Next is facilitate price discovery. What exactly the real prices? You are supposed to know that there is two kind of a thing. One is face value, another is market value. So which one you will actually go with the discovery, you need to understand. Provide a liquidity to financial assets. That is, you need to always maintain the liquidity. And the last one is reduce the cost of transactions. You need to reduce the cost of transactions. So these are the four important functions of financial market. Let's check one by one all the four. The first one is mobilization of saving and channelizing. I've given you. Usually what happens is we don't have a concept like money plant. We will not put more manure, fertilizer to actually make that money plant grow. When I say money plant, we have two kinds of things. Now, I've given you here the picture, right? You should always see that your money gets double. If not, at least it should grow. That's the reason you are supposed to always go with financial market. A financial market facilitates the transfer of saving from saviors to investors. So you will actually start saving it. Now there is a channel that is called financial market that will actually bridge a gap between the investor and the saviors. Now you need to go and talk to the investors. That is how you can actually generate more money. Example I'll tell you. Say example, you have 1 lakh rupees in your briefcase. After 5 years, you have not done anything, right? Like within 5 years, you have not done anything. After 5 years, when you check also, you have the same 1 lakh rupees, but money value always decreases. Best example is you go and buy the crackers. When you are in your second standard or third standard, when you were going with your parents and buying crackers, for say 100 rupees or 500 rupees, you used to get more crackers. But now if I give you the same 100 rupees or 1000 rupees, you will not even get one entire box. Understand? Money value. But what happens in financial market is you can always go for doubling, right? There are people who have actually become rich only because of financial markets. You can actually watch and read many stock exchange brokers or people who have been the gurus of financial market. You will come across that the investment when they started was very, very little, and what is the return? They got more. But adverse effect, I'll tell you. There are people who don't know how to start this financial market kind of a thing, but they have lost their savings. Even this is actually a fact. That's why I want you people to know the business and then go for it. It gives saviors the choice of different investments and thus helps to channelize surplus fund into the most productive use. See, for a person, 1 lakh rupees is a big amount. For the other person, 1 lakh rupees is not at all a big amount. For everybody, the money actually matters more. Now what happens is that 1 lakh rupees, whatever he has saved, he always wants to double it. So this financial market will channelize those amount for what? Into the most productive use. Next one here we have is facilitate price discovery. What it does, you all know that the forces of demand and supply helps to establish a price for a commodity or service in the market. Yes, when demand is more, okay, demand is more, what happens is the price will go high. In the same way, if demand is low, the price will actually come down. So you will get to know when you are supposed to invest and when you are not supposed to invest. When the price is high, it is not advisable for you to invest. When the price is less, you are supposed to invest, because after that it will take a boom. That is what the price discovery is all about. In the financial market, the household or suppliers of fund and business firm represents the demand. When more and more people are actually investing on the financial market, that is when we will get to know there is a demand or there is not a demand. I'll give you an example of stock market, right? It's not like it's a part of financial market. In the stock market, when the pandemic started, Infosys shares was drastically from 1000 shares, that is per share, it came to 500 rupees. Now what is the effect in this? That means people started to sell the share. sell the share. So it became 500 rupees. After March, April and May, slowly what happened? Infosys shares started to come back to same position, say 700, 800. Now if you check, it is say 1100 rupees. Now why? The reason is what? Again, the saviors, whoever were saving the money, they thought that this is the right time to invest on Infosys, and they started to invest on it. Now what it is again a channel, which is giving you what? A good amount of profit. That is called facilitate price discovery. Next one is provide liquidity to financial assets. Liquidity to financial assets. Financial market facilitates easy purchase and sale of financial assets. Yes, financial market facilitate easy purchase and sale of financial assets. So whenever you have any financial assets, where will you buy and sell? That is the financial market. In doing so, they provide liquidity. That means what? Easily you can convert your financial assets as money, that is a cash. You have some assets with you. So those financial assets, if you go and exchange it in the stock exchange, what exactly will happen is you will get a proper liquidity to what? The financial assets, so that they can be easily converted into cash whenever required. So that's the best thing. You have kind of financial assets, say of 1 lakh rupees, and you want to convert that into cash. Where will you go? Where will you actually buy it? You can't actually give those slips to anybody, and anybody actually, whoever will give you the money, he will not accept it. He'll actually ask you for more interest, right, or commission. But what exactly you are supposed to do? Go to the financial market. Whatever the financial assets you have, you give it to them, and what in return they'll do is they'll check the slab rates of tax or whatever it should be tax or it should not be tax. All those they will work out, and then what exactly will happen is they'll convert it into the cash whenever you want it. That is the advantages of financial market. The last one is reduce the cost of transaction. I told you, right? If you go to any individual, what happens is they're gonna charge more money. But here what happens is there is a reduction in the cost. The first one here is financial market provides valuable information about securities. Valuable information about securities being traded in the market. First thing. Second thing, it helps to save time. See, time is money, students. You need to always understand. Time is money. Effort and money that both buyer and seller of financial assets would have to otherwise spend to try and find each other. Usually this happens, right? Who is the buyer? We don't know. Who is the seller? We don't know. Now the buyer need to actually search for the seller if it is like man-to-man transferring the financial assets. But here what happens is, this is a market where buyer and seller will come together and you can exchange. Now whom are you giving it? You don't know. From whose he is actually purchasing, even he will not know. What is that they know is the best price. If you quote, the things will be sold. That is how it happens. So there is what? Reduction in the cost of transaction. What is that reduction? That is, one is it helps to save time, effort and money that both buyer and sellers of financial asset would have otherwise spent to try and find each other. And the next one is financial market provide valuable. Please understand this. It's a very important one. That is, financial market provide valuable information about securities being traded in the market. Whenever the securities are traded, where the securities are traded, it is traded in the primary market or the secondary market. I'll talk more about primary market and secondary market in my next sessions. Until then, I'll see you when I see you. Thank you so much.